Okay, within the Reference Guide to Regulatory Compliance on page 972, covering lost or stolen securities regulation within the securities, insurance, and other financial service regulations. In 1977, Congress established the Lost or Stolen Securities Program under the jurisdiction of the SEC. This program is intended to assist institutions and the public in tracking lost, stolen, or counterfeit securities. The program works by requiring covered institutions to report lost or stolen securities to a central location, the Securities Information Center, SIC. In addition, under certain circumstances, the institution must also inquire of the SIC whether securities that came into its possession have been reported as lost or stolen. By establishing a central clearinghouse for information, the SEC has deterred trafficking in lost and stolen securities. Financial institutions generally are required both to report lost or stolen securities and to inquire whether certain instruments are lost or stolen. The coverage are institutions, also called reporting institutions. Every national securities exchange, as well as its members, registered securities association, broker-dealer, municipal securities dealer, government securities broker or dealer, registered transfer agent, registered clearing agency, or its broker or dealer, and its participants, Fed member banks, and FDIC-insured depository institutions are all institutions covered under the Lost or Stolen Securities Regulation. Transactions covered are all securities-related transactions, including the purchase, sale, or pledge of investment securities and any custodial arrangement for investment securities. Securities exempt from reporting or inquiry are certain types of securities as follows: securities that are not assigned Committee on Uniform Securities, identification procedures, which is CUSIP numbers, and bond coupons, uncertificated securities, and global securities issues. Any securities issue for which neither the owner of record nor the beneficial owner can obtain negotiable securities certificates. The reporting requirements for stolen securities as follows: 1. Banks must report within 1 business day after discovery any theft or loss of securities where criminal activity is believed to be involved. 2. Reports must be made both to the SIC and to the Federal Bureau of Investigation. Missing or lost securities reporting requirements. 1. Banks must report within 1 business day after discovery any lost or missing securities that have been lost for at least 2 business days and in which no criminal activity is suspected. 2. Loss must be reported to the SIC and to the registered transfer agent on the securities. And 3. Exceptions. Securities lost in transit to customers, other banks, brokers, and so forth must be reported within 2 business days of the receipt of the notice that the securities were not received, or as soon as the certificate numbers can be ascertained. Oh my goodness. Other exemptions to the missing or lost securities is securities that are discovered missing as a result of a securities count or verification must be reported by the end of 10 business days after completion of the count or verification, or as soon as the certificate numbers can be ascertained. Another exemption is if securities were purported to be delivered but were lost or missing during the completion of the delivery, the following rules apply. 1. If delivery was through a clearing agency, the delivering institution must supply the receiving institution with the securities certificate numbers within 2 business days from the date of a request from the receiving institution. The receiving institution must report the loss within 1 business day after receiving the information. 2. If delivery is in person and the delivery institution has a receipt, the delivering institution must supply the certificate numbers to the receiving institution within 2 business days from a request. The receiving institution must report the loss within 1 business day after receiving the information. 3. If a delivery is in person and delivery has no receipt, the delivering institution must report within 2 days of the notice of non-receipt by the receiving institution. And lastly, if the delivery is by mail or draft and payment is not received within 10 business days, the delivering institution must confirm the delivery with the receiving institution. If there was a failure of delivery, the delivering institution must report the loss within 2 business days after the confirmation. Reporting requirements for counterfeit securities. Banks must report the discovery of any counterfeit security certificate to the SIC, the FBI, and the registered transfer agent within 1 business day of discovery. Recovery reporting requirements. All recoveries of certificates previously reported must be reported to the SIC and FBI, if applicable, within 1 business day of the recovery. Reporting requirements for the form and content of reports under the reporting requirements must be on a Form X-17F-1A. Reports to the FBI should be on the form designated by the applicable regulatory agency. All reports must include the following information as applicable: the name of the issuer, the type of security and series, the date of issue, the maturity date, denomination, interest rate, certificate number, name in which registered, distinguishing characteristic, if counterfeit, date of discovery of loss or recovery, CUSIP number, financial institution numbering system, FINS number, and the type of loss. Inquiry requirements. Part 3. A bank must make an inquiry of the SIC whenever it receives a security certificate within its possession or keeping, includes securities in a safekeeping operation and securities pledged against loans at the bank, to ascertain whether the subject security has been reported as lost, counterfeit, or stolen, unless A. the securities are received directly from the issuer or the issuer's agent at issuance, B. the securities are received from another institution covered by this lost or stolen securities regulation or from the Federal Reserve Bank, and C. the securities are received from a customer of the bank with whom the bank has had experience in at least one prior purchase, sale, or pledge of securities, or has had a prior custodial arrangement for investment securities wherein the securities are in the name of the customer or its nominee, or the securities were previously sold to the customer as verified by the internal records of the bank. D. the securities are received as part of a transaction that has an aggregate face value of $10,000 or less if bonds, or an aggregate market value of $10,000 or less if stock. Or lastly, the securities are received directly from a drop that is affiliated with an institution covered by the lost or stolen securities regulation that is established especially for receiving or delivering certificates on behalf of the reporting institution. Record-keeping requirements for Forms X-17F-1A. All agreements and all confirmations or other information should be kept for 3 years.